Saturday, June 29th, 2024, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at the currency scorecard. And I think it's appropriate because it's the end of the quarter, second quarter. It's the end of the semester, the first half of the year. And no, I'm not going to be looking at currencies versus the dollar. We're going to look at the major fiat currencies versus gold. And you might be thinking, if you're new to the channel, why do we have to look at currencies versus gold? Gold is a commodity. Well, I will tell you why at the end, after we look at the currency scorecard. And it's something that I've learned over the last 25 years. And it's something that's helped me protect my savings. And it's very simple, but it's something that you won't hear on Bloomberg or CNBC or that you're going to read in the FT. And that's why I'm the home of alternative economics and contrarian views. And I've been warning about this particular lesson that I've learned for, well, almost 20 years. And it's taken me, of course, more than 20 years also to learn about everything. And I'm going to show you the secret, in my opinion, to what's going on and why it's happening. So let's start with the currency scorecard. And it's really simple. We're just going to be measuring how gold is done versus all major fiat currencies. And I'm going to start with the US dollar, which many consider the king of currencies, the king dollar. But by the end of this video, hopefully you'll realize that the dollar's anything but the king of currencies, and that gold is. So, dollar, US dollar. Well, gold was up 13.02% versus the dollar in the first 6 months of the year. In pounds, where I am in the UK, gold was up 13.72%. So just a little more than versus the dollar. So all this means is that the dollar and the pound are buying less gold, so they're becoming weaker. Versus the euro, gold was up 16.79%. So the euro has performed even worse of these three major currencies. And now we're going to move more towards the smaller currencies and emerging markets. And we're going to see the ugliest currencies as well. That will be, of course, the currency against which gold has gone up the most. So yeah, let's start with the really ugly ones. And one of them is in the emerging markets, and the other one is a G7 currency, but it's not in Western Europe. So the worst performing currency is the Brazilian real. Yes, gold is up 30% in the first 6 months of this year. What's the second worst performing currency? Well, it's the Japanese yen. And you're probably not surprised by this because you probably heard that the Japanese yen is making like 38-year lows versus the dollar. So if the dollar is losing against gold and the Japanese yen is losing quite a bit versus the dollar, yeah, it's normal that it's doing really badly versus gold. So gold is up 28.64% versus the yen. So let's continue, and we're going to go to Scandinavia now. And Scandinavia is interesting because they still have their own currencies there. Sweden, for example, the price of gold is up 18.77% versus the Swedish krona. Gold is up 18.88% versus the Norwegian krona. And it's up 16.26% versus the Danish krona. So let's move to back to North America and look at the Canadian dollar. Well, the Canadian dollar hasn't done that well either. It's not as bad as some of the ugly currencies. Gold is up 16.42% versus the Canadian dollar. Going down under the Aussie dollar, while gold is up 15.16% versus the Aussie dollar. What about China? You might be asking, China's been buying a lot of gold. How's their currency done? Well, gold is up 15.38% versus the yuan, versus the Indian rupee, and India's been buying a lot of gold. Gold is up 13.02%, which is the same performance that it had versus the dollar, which is interesting. What else have we got here? Well, the Swiss franc. That's been a big shock to me, because the Swiss franc is, probably the worst major performing currency in Europe. Gold is up 20.43% year to date, and I was surprised by that number. What does that say to me? I think it says to me that a lot of the wealthy people in the world that keep their money in Switzerland or in Swiss francs, the big family offices, are maybe moving into gold. So that's quite interesting, I think. What about emerging markets? Let's continue with the emerging markets. We looked at Brazil already. Well, the Mexican peso, gold is up 21.67%. So it looks like the countries south of the border are going back to their old ways of inflating things. Up until last year, I think the Brazilian real and the Mexican peso had been doing pretty well, but now they're back to their old bad habits. Singapore dollar, which is a currency that's fairly solid. It's compared many times to the Swiss franc, but the Swiss franc, as we've seen, is not doing that well. Well, the Singapore dollar hasn't been doing that well either. Gold is up 15.88%. And we're going to end with actually the best performing currencies of the major currencies. And you'll be surprised. It's a country that has been sanctioned left, right, and center. It's a country whose reserves have been confiscated and frozen. Well, it's Russia. Gold is up only 8.33% versus the Russian ruble. So there you go. That's the best performing fiat currency up to the first half of this year. So does that mean that you should hold rubles? No, not at all. In my opinion, you should hold gold. And why is that? Well, here we come to the dollar index. The dollar index was an index that was created, and its inception was March 1973, and it was created at 100. And why was the dollar index created? Well, because prior to that, currencies were fixed to each other. And you might think, well, that's not a free market. But it's not about a free market. It's about measuring wealth. Because prior to the floating exchange rate that started in 1973, currencies and money had a weight of gold. And you could argue silver before that as well. But it had a weight of gold. So would it make sense to have a market where the length of the inch, the length of the centimeter, the weight of the kilo, the weight of the pound, and the distance of a kilometer or a mile would change every second? No, it wouldn't. And that's the reason why the world's so screwed up financially, economically, and monetarily. We've been on a crazy non-system where currencies fluctuate against each other. They're not like pegged to real money, i.e. gold. And that happened, of course, because Richard Nixon detached the dollar from gold on August 15th, 1971. And they thought they could keep their currencies fixed against each other. And they tried it for 2 years and they realized, well, it's impossible because there's no discipline and countries print left, right, and center and currencies fluctuate. And that's why they created the dollar index, was to measure a rudderless US dollar versus other rudderless fiat currencies. And if you know that, and if you know how the dollar index is done since then and how gold is done since then you realize why gold is the currency or the money of kings. And I'll give you the reason why it's going to continue. So, and the performance of the dollar index and of gold since March 1973 is irrefutable evidence that gold is the ultimate store of value, and it's the only way really to safeguard your savings over the long term. So I told you the dollar index started at 100 in March of 1973, and now it's at 105.87 as of yesterday. Yes, it's up 4.42% year to date, but so what? It's up only 5.87% in just over 51 years. While gold, if you look at where it opened in March 1973, well, it was at $86. Yes, 86, not 2,386, 86. So gold is up 2,610.34%. There's no argument. And why is that? Well, that's the secret I told you about, and it's a secret that I've learned over time. Ever since I started looking into the monetary system, into gold, into fiat currencies back in the early part of this century. And it's that fiat currencies, eventually they all collapse, they all go to zero. And why? Well, because in the beginning, it looks like it's a good way to incentivize the economy, to get credit going. You issue a bit of paper currency not backed by anything. You can help the economy come out of a recession. It's the old Keynesian fallacy, right? That is still regarded as like, it's still regarded as the holy grail today by our managers, our politicians, our central bankers, and economists. The problem with that, though, is that once you go down this road of fiat currency and inflating, you can't stop. And why is that? Well, because the other side of the currency is debt. And if you keep inflating the money supply or the currency supply, and you keep the economy going, and you issue currency, you always have to issue more to pay the interest on the debt. And also, if you try to rein in the inflation, you create like massive and deep recessions. And politically, that's not attractive. Statists and socialists who are running everything now, and the globalists, they need to keep things going. And it's become such a huge debt bubble that they can't stop. And that's why currencies are all going to go to zero. It's only a matter of whether they can control the sinking of these currencies. And that's why I've been telling people that all currencies are sinking. Well, I've been warning people for over 15 years about that. So that's the whole secret. That's all it is. So what is, in my opinion, the lesson from fiat currencies and why they're all sinking? Well, the lesson for me is that if you want to hold savings over time, And if you're not like comfortable in investing, let's say in the business, the best way to do it is, of course, in real money, gold, and even some silver, of course. And so I'm not trying to say to you that you should put all your money or all your capital in gold and silver. But what I'm trying to say is that keeping your spare savings in fiat currencies is a losing proposition, and that hedging fiat currencies against each other and the dollar index is a huge distraction and very dangerous to to the value of your savings or your wealth. Before we finish, just want to show you a couple of charts. One is of gold, and it's a quarterly chart going back to the early 70s. And you can see here how gold is actually closed yesterday at the highest quarterly level ever. So we closed at 2,326.5. That was the last quote at 10 p.m. London of the spot price. And I put a couple of shaded areas here. The first shaded area is back during the 08 crisis, where gold spiked above 1,000 back in March of 08, and then it consolidated. It collapsed like in September of 08 from down to 680. And then it picked up again, and it broke out and went on to almost straight to 2,000. But there was a period there of consolidation and correction. And I think we've been through our current consolidation and correction. And that's why I put this shaded area here. And it was, for me, it looks like it was between 2020 and 2024. It's taken longer. And I think we've broken out now. This, of course, is not financial advice. This is my opinion of what's going on. And now let's move to silver. While the silver chart is slightly different because even though we've made a 11-year high in terms of a quarterly close at 29.14, silver is still way below its all-time high of near 50 back in 1980 and in 2011. But I found the same kind of pattern of consolidation and then breakout in silver. So there's one back in the 08 financial crisis time frame, and there's one now, and I think we're breaking out of it right now. And that's why I think we're still in the early days of the moving silver. I don't know where silver is going to go in terms of the dollar, but it's not too late to get on this train, the silver train, I would say. And with that, I'm going to wish you all a very good day and a very good weekend. Take care. Bye.